So ladies and gentlemen, today in this video, I am going to give you 3 simple trading hacks that are going to change your game on the market. And I'm not just going to give them to you, I'm going to show them to you. I'm going to give you the blueprint so that you'll be able to make way better decisions in the market, because 90% of the time we don't fail because we're stupid or we're ignorant or we're retarded. We fail because we really just don't know what to look for. These simple trading hacks are going to help you determine if the market is healthy or if the market is unhealthy, unfruitful, chaotic, right? And that is what is important. I remember struggling as a trader, and it was primarily because I just really didn't know when the market was going to go validly up or validly down, right? I just wanted to trade. I wanted to get in. I had emotions going through the roof, right? And then all that really led to was massive amounts of anxiety in the market. And it's because I didn't have this simple approach, okay? So Josh, what is this approach you speak of? All right, well, it's very simple, and it consists of 3 simple steps, okay? Step number 1 is it's got to be off a key level, all right? A key level is previous day high, low, open, close, or my personal favorite, open print. Open print contains massive amounts of volume, so we want to watch it. We want to see the footprint that the banks and institutions leave at the open. And then when we see which direction that they're walking, we just follow the road, baby. Listen, most of the time, guys, and I would argue this is the case for life, we're just very good at overcomplicating the situation, okay? If you could take a step back, view the market, and actually know what to look for, I would argue you would get way better results. As a matter of fact, if you follow this strategy, you're going to get around a 75% win rate. And don't believe me? Let's look at the data. In the last 15 months, we've taken 297 trades, 232 have been profitable for at least $1, and then 65 of them have been losses, okay? Once again, this is what we look to trade each and every single day. Clarity is key, all right? It's much like being on a diet, all right? If you are fat and out of shape, chances are you're not counting your calories. You're unclear on what you're intaking. If you're unprofitable in the market, chances are you do not have a strategy that you actually believe in. This is what I'm here to give you today. And for anybody that wants more information on this strategy, put your first, last name, and email in. I'm going to send you a mini course on it, okay? Because once again, it's my job to build the most authentic and strongest Discord out. So I'm looking to train traders to become that much better. That's my goal. That's my intention. If you're interested, click the links below. All right, so let's go back to the strategy. Step number 1, open print, volume. Okay, what's step number 2 about? Step number 2 is my favorite. This is the EMA cross, okay? Now, if any of you are familiar with my videos, you guys know I live and breathe off my moving averages, okay? Moving averages are going to give you the information you need to do what? Pull the damn trigger. I don't care what nobody says. I'll argue it until I'm blue in the face. They are not a lagging indicator. You are using them wrong, okay? I'm going to say it one more time. Moving averages are not lagging. You're lagging. The way you use them is lagging, okay? Moving averages is a statistical point on your chart representing the average price of the commodity based off volume, based off time. So when you learn what a healthy trend is, and I'm going to teach you exactly what to look for, and you learn what an unhealthy trend is, I guarantee you'll start to get way better results, okay? And then step number 3, another one of my favorites, is the RBI GBI. This is the red bar ignored or green bar ignored. It looks something like this. You get a green bar right here that's disrespected by the following candle. What does that tell us? That there's trapped buyers there, okay? Now this box around it, this becomes the area of value, all right? And then we like to drop down to the 2-minute and identify that 2-minute 20 being respected. Enter into the market short. Stop goes where? Above the 2-minute candle, and you take the market down. This is the strategy that's going to change your life. This is a strategy that's changed my life, and this is the strategy that I teach to everybody that joins my team so that their lives can also be changed. Now, let's bring it back to some examples, all right? We're not going to go through the full data report, but I am going to break down this example because this is very important, all right? This happened just last week, 11/26/2025. This was one of the losing positions, all right? Now, Josh, walk me through from the beginning, all right? Step number 1, open print. Why do we watch the open again? The volume. It is not our job to be Houdini out here and predict which way the market's going. You try to predict, you're going to blow your account. It's our job to identify who is in control of the key level. The level is going to give you and show you who is dominant. There is vast majority of volume at these levels. So whomever can control it, whether it be buyers or sellers, they're going to show themselves. They're going to show their cards, okay? Imagine playing poker or blackjack knowing the other person's cards, okay? That is literally what we're able to do when you learn the principles and tips and tricks that I'm going to teach you, okay? Number 1, watch the open. Number 2, identify the cross. Number 3, identify the GBI that takes place off the open, all right? Now, we didn't participate in a short play here. Does anybody know why? Because the 20 EMA was flat. Mama always told you, don't hang out with that girl, and also don't trade a flat 20, okay? A flat 20 is a prime example of indecision. Now, we remained patient and we waited for sellers to lose this zone. What is this zone called? For all my HPT members, this is called the area of value. I call it the area of value because in this zone lies your next valuable opportunity, okay? What happens at this zone is going to paint a picture. Now, sellers just tried to hold it, but they were unsuccessful, all right? So the pendulum tried to swing down, couldn't, and now it's on its way back up. But we're not just going to hop in the market. We're going to wait for that RBI, or that moving average cross, then that RBI right here, okay? We get that red bar that's ignored. We drop down to the 2 minute and we play the 2 minute 20 retest and respected moving average. Once again, moving averages saving the day, okay? I've recently started trading futures, and for all my futures traders out there, if you are not using moving averages, that is probably why you haven't passed that account. Join the team and I'll make sure you learn exactly how to use the moving averages. All right, so once again, we just went over, that was the winning trade right there. You can see long entry, beautiful, beautiful trade. And I just love the polarity of it, okay? If buyers aren't holding, sellers probably got it. If sellers lose it, find a way to trade with buyers. It's all about figuring out who is controlling that critical level. All right, and now let's talk about this day right here, 1027. 1027, we were live on YouTube, and if you want to join us, you guys already know what to do. Make sure you show up at 9:15 a.m. Eastern. All right, but once again, we have a key level here. This is previous day high. We open below it. Now, sellers lose the ball here. But once again, we're not trading this. Why? Because there's no criteria. All right, we actually did take a long play right here, but this is the one I want to talk about. All right, look at this RBI, red bar, ignored, off this key level at previous day high. What's this telling us? This is telling us that sellers got into the market and they are now trapped, right? So we obviously took the market long and we capitalized on a good trade, okay? But besides that, let's dive a little bit deeper. We get this red candle that is ignored. We draw our zone. Do you guys remember what I call this? The area of value, all right? Now, once again, there are sellers here, which is why they got into the market. They thought they were going to make some money, but they're not. They're now in losing positions. And this is the thing about large money. They can't just get out of the market. They need what? The liquidity, which is why, you guessed it, price needs to come back to the area of value, and then they start stomping out of their short positions, which adds to the buying pressure, which causes price to rally to the upside. I hope you guys like this video. Go get that mini course, click the links below, take advantage of what we offer, and stay blessed until I see you next time.